Hey guys, Champ here, Shredded FX Trader. Welcome to another Forex education video. If this is your first time here, welcome, thank you. I appreciate you being here. If you are returning, welcome back. Thank you for returning. So, today I'm going to be talking about chart patterns, formations, and mainly going to be focusing on how to trade breakouts from a rectangle pattern. So the two basic elements of technical analysis and the study of chart patterns in particular are the concepts of support and resistance levels, along to go with trend lines. The Dow theory of trends, for example, is based on support and resistance and states that the market is in an uptrend when it makes higher highs and higher lows, and the market is in a downtrend when it makes lower lows and lower highs. The highs are formed at resistance levels where selling is strong enough to reverse in the rally in prices, while the lows are formed at support levels where buying is strong enough to reverse the declined prices. However, support and resistance levels, which are horizontal lines, are often confused with trend lines, which are lines that slope in the direction of the trend. So I'm not going to talk too much about the trend lines today. We're mainly going to focus on support and resistance levels, and more importantly, we're going to be using the Fibonacci to establish our intended targets for trading out of consolidation periods. Now, the market generally consolidates between the 61 and the 38 Fibonacci. As you can see here, we can set up a nice trade, either short or long, depending on where the breakout occurs. So, as you can see here, the market is consolidating, and so what happens is the price breaks up and then it consolidates, and it will bounce between support and resistance levels. As you can see here, resistance, support, resistance, support, support, resistance, and support. So unless we get a clear break below the 38 or the 61, a retest, and we get another signal to go short, then we would take it. Here we never got that. As you can see, we just had some bullish price action on the last few hours, and you can see now we're actually pushing back up, and we'll probably hit this resistance level, maybe even go bounce back up to the 61 again. So how I would normally trade consolidation breakouts is wait for a clear break below, probably 50% between the 38 and the 23. We generally then have a retest of this broken support, now found resistance, and then we would look to go short again, and we would hit the 23. Our second target would be the 11. Sometimes you could actually miss the whole movement, and you could actually hit this straight away and then go straight to the 11. But again, that doesn't happen that often, but it is something that could possibly happen. As you can see here, we had this huge push to the upside, which actually took out the whole of this resistance level and created a newfound resistance over here. So we're not just going to trade in any direction. However, what you're going to do is you're going to look on a bigger time frame of what the actual trend is doing. Where are we in the market before you want to either enter long or short? So here you can see we're consolidating at a resistance level on the 4-hour time frame. You can see here we had an impulse, we had the correction, the impulse. We're waiting for another correction. Okay, you can see we're consolidating. We're not sure what the market is going to do as of yet. If you look on the daily time frame, you can see we are currently in this bearish trend over here, this bearish channel. We're sitting at resistance here, and one could expect a push to the downside to this support level over here. Alternatively, this could be the move where we have a breakout, and then we would look for a retest to go long. So obviously a few scenarios how they're going to play out. But if we go into the lower time frame, you can see the consolidation here. This is not a clear break of the 38 enough for me to warrant going short. As you can see here, we're pushing back up towards resistance here. I'll give you another example in New Zealand chef. or the New Zealand Swiss. You can see here the market's consolidating between the 61 and the 38. So again, what we would look for is a clean break, a retest, and then go short. If we look on a bigger time frame here, you can see that we've had our correction. You can see the market impulse, correction, impulse, correction, impulse, correction. Are we going to be expecting another push to the upside here to go up there? So again, that is something we've got to look for. So this could be the move where we're going to go to the 78 and the 89. If we look on the daily time frame, you can see that we've actually broken. We had our retest. This could be the move to the upside to this resistance level here. So again, it's all just different probabilities on looking at the market and all aspects of it. So another way you can trade consolidation is once we know that we're in a sideways pattern and we know that the market is consolidating, you can look here. If you look at this on these candles here, we know we've got our support level here, huge bearish engulfing candle. Look to go long, keep your stop tight. If you're going to be scalping the markets, this would be our target up here. Your stop would be below here. Again, bearish engulfing, bullish engulfing candle, apologies, right on support level, target up there. Same thing for the resistance level. We had a bearish engulfing candle here, and we came down and hit our target down below. So you just got to look at it from a step aside and look at an outside point of view. What are your candlestick formations doing at support and resistance levels? So here we had, let's go back, pound Oz. You can see we were consolidating, clean break, straight up, in a few hours, straight up to the 89. We then had a bearish harami, inside bar, whatever you want to call them, at resistance. We had a push to the downside. Here you can see that there was actually no movement there. It went straight down, hit the 23, so you wouldn't have been able to get in the trade. But again, you can see how the market loves the Fibonacci levels as support and resistance. So again, break, retest, go short, you hit your target, and you've hit your second target. It's even gone even further. So that is how I like to trade consolidation breakouts. If this has helped you, please like, comment, share. You know how it goes. And I look forward to seeing you in the next video. If you haven't had a look, I do have a couple of other videos on how to trade head and shoulders patterns, triangles, wedges. So have a look on the YouTube channel. Alternatively, go through to my website, theshreddedfxtrader.com. I do have loads of other content on there regarding to not just trading, but also health, fitness, and also personal development, success, and motivation. Take a look. I'll see you in the next video. Have an awesome day. Peace.